Hi, I'm Peter Akerley. I am the President and CEO of Erdene Resource Development. We're listed on the Toronto Stock Exchange and the Mongolian Stock Exchange. We are in the final stages of bringing to production a high-grade gold project in southwestern Mongolia, the Bayan Khundii project, and looking at continuing to build out from there. We have a new district called the Khundii Minerals District with a number of deposits and prospects that we intend to develop in sequence as we get to that cash flow sweet spot later this year.
Peter, good to see you.
Good to see you as well. Happy welcome to Toronto.
Yeah, you got a bit of a smile on your face. Anything to do with the share price?
Well, that's helped. I think last time we spoke, we were about half this value.
Yeah,
so it's nice to see that appreciation and the attention from some significant shareholders.
Some very significant shareholders.
Absolutely.
It's good news. Look, I think the stories like this are catching the eye at the moment because there aren't that many. Mm-hmm. This advanced build phase that you're in at the moment. So what's the actual timing for getting?
So we expect to be completing the build as we move into April. We'll move that into dry commissioning and final approvals as we move through May, June. We expect to be wet commissioning in July and first ore through the plant later part of that month.
Right.
It'll probably take us about 60 days to get to commercial.
Right.
So as we move into September, October, hitting that 4 gram per ton head grade and 90% capacity.
Right. And you talk about commercial. When do you hit kind of nameplate? Is that what you're referring to?
Yeah, well, that's 90% of nameplate
90%,
by the time we get to that point.
Okay.
As we move towards 100%, it'll be 7,000 ounces per month of production.
Okay.
Yeah.
Significantly advanced. Yep. All the heavy lifting's done.
Yeah, well, I wish that was the case. Yeah, it's 27 years to get here, and it's all said and done. But no, it's an exciting time for the company.
Right, and I think that, as a reference, there's not a lot of new ounces coming into the market. We're seeing a lot of JV or acquisitions of existing ounces coming together with existing ounces. It's quite nice to see some new ounces actually getting produced.
Absolutely.
So is that part of the reason for the kind of good reception out there?
You know, I think when you look at the attention to our story, it's twofold. It's obviously the proximity to first gold. It's the high-grade nature of this deposit. At 4 grams per ton, we set ourselves far apart from most in the open pit world. Mm-hmm. It gives us a buffer on the economic side. A lot of people get concerned about that startup phase. When you can push 4 grams per ton with simple metallurgy, you should have some forgiveness in those initial stages. So I think people understand that. But most importantly is that high grade in a new district. You know, as you know, we went out here in 2015 and picked up 4,000 gram samples as the first modern geologist to ever walk out there. And we see that continuing. You know, we drilled in October since we last spoke, 200 meters from the pit wall, and we're hitting 40 meters of 7 grams within 140 meters of surface. And I think that's the kind of opportunity we see in front of us in multiple directions around the Bayan Khundii site. And I believe the market is understanding that. You know, they are paying us for what's a relatively short mine life of 6 years in reserve. But I think the understanding is there now that this is much larger. And the strategy we employed in 2019, where we saw that potential but made a decision to move away from equity dilution and get to cash flow, people are understanding the strategy there and that those opportunities are in front of us.
A lot of copycat happening out there right now.
Yeah, for good reason. It's been really tough to finance projects. And, you know, we're seeing that tip a little bit, but sometimes that window is flirty, but it's tough.
Well, the other problem it solves for is the fact that not having to go back into the equities market in a market like this,
absolutely
expensive capital, because once this thing gets into production, because I'm very guilty. I always kind of get in the conversation like, we know we're talking about this. People are new to this story who was writing me and go, well, can we get into it? Talk about what's your share of the upside? It's the simplest way of looking at it.
So we entered into an alliance with Mongolia Minerals Corporation back in January of 2023. We brought that to fruition in January 24. That's a 50-50 joint venture on the gold projects in the Khundii district. But on top of that, we've added a 5% NSR, or retained a 5% NSR that kicks in at 400,000 ounces. So once you get to that point, you can kind of look at the economics as a 60-40 split in our favor, if you value that 5% NSR as an MPI. That's the simple view of it, and we'll be producing 85,000 ounces per year. At these gold prices, we see that generating after-tax cash flows in excess of $100 million per year, 50% to our credit. We will be repaying our debt fairly rapidly as we come out of that. I think at these gold prices, probably less than 1.5 years. We will immediately be deploying some of those monies into exploration. We expect to be doing expansion drilling to the west and on the Dark Horse deposit later this year. But as we move into 2026, 2027, we expect to be spending in excess of $10 million a year on exploration to start to unlock that value.
Right.
And that, when you talk about what's this worth to us, yes, you have the cash flow, but we already have the other deposits that are there in front of us to begin to look at expansion and or second developments.
Right.
So I see this being developed in sequence.
Okay, so and I do want to come to all of that because that's the super interesting bit. That's the growth bit. Just on the balance sheet stuff, the debt payment schedule. You can pay it back in a year and a half. Do you have to pay it in a year and a half?
No, we don't.
There's
So
no pressure on you there.
No. So
Right.
to back up on that, we brought in 40 million equity US dollars on the deal with MMC. We added to that with an $80 million shareholder loan that can be paid back over 5 years. On top of that, we secured another $50 million in working capital funds in December of last year that can be paid back over a 3-year period. So the main one in there is the 80 million from MMC, which we have 5 years to repay.
Right.
Yeah.
And that is, you take advantage of that.
Oh, absolutely. Well, yeah, I think we'll see where the gold price is, but we plan to take advantage of that.
Right. Okay.
Yeah.
Okay. It's I guess in a meaningful way, so cheap capital.
Yeah. No, it's much less bells and whistles attached to it than we would have structured.
You know
with
where you
a,
go. So that's okay. That's kind of cool. Because obviously part of this is the expansion, but there's you've kind of got lots of additional targets in the kind of Khundii region as a whole, and we're talking about satellite projects which could possibly feed into the plant. If you do find bigger things, is there sort of mill expansion capability designed in?
Yeah, let me walk through that a little bit. So the first thing is back in September when we last saw you, we did some drilling, the initial infill drill work, and that suggested that we will see very positive grade reconciliation. We've had numerous intersections of 10 to 200 grams per ton in that top 15 meters. We followed that up with an expanded program. So that was about 900 meters. We've now done 13,000 meters since then, what we'll have in the market later this month. But we expanded that program given how much broader we saw those high-grade zones extending in that top 15 meters. The point in giving that up front is that if we can move this head grade from 4 grams to say 4.5 or 5 grams, and you've got 10% or 15% more gold coming out of that complex, which you don't have to change anything for, right? That's just a grade situation. We feel that if we can maximize this mill, we can probably add about 10-15% to the capacity as well without significant capital constraints. So that's starting to push you up with some increased grade, with some tinkering or optimizing the plant in that 95, maybe 100,000 ounce range. With a capital injection of perhaps 20-25 million, which would be putting on a gravity plant, adding another ball mill, adding another tank, you're probably able to get this up into the 120, 125
Are we ore
range.
sorting as well?
No ore sorting. No.
Is that something that it might
Something
be
we
amenable
toyed
to?
with, but I don't think so, given the limitations on that separation technology in this rock type.
Okay.
We've got disseminated gold throughout the wall rock, so it's very hard to do that sorting with color differentiation. But the gravity is an important one. We have the ability to pull about 50% of the gold out in a gravity plant.
Right.
We didn't add that circuit at the front end, but as we find more high grade adjacent to, then it makes sense to start to consider that gravity plant added into the circuit.
That's the plant part optionality there at some point. I say not a lot of additional kind of capex, and we're just going to see those 15 also improvement. Let's go back to the exploration, because that's the bit that you guys are good at. You've done well so far, and you've got a lot of targets going on. How do you prioritize that? Because you've got a big land package. Yeah.
So the first thing is the low-hanging fruit around that current pit. So the first thing is that pit was defined at $1,800 gold. Today's gold price, obviously, that pit expands. So the drilling that we did in October was to test areas to the west where we feel that expansion is right in front of us. That's where we've intersected some of the highest grades to date, 40 meters of 7 grams. But even outside of what we had previously deemed the resource boundary, we're still hitting 20 meters of 6 grams of gold. So that's the area that we feel could add, let's say 150, 200,000 ounces. And that's high grade. We have significant low grade in multiple areas that you could bring in and blend with that. That allows us to say, instead of 6, we're well in excess of 10. I think that's an easy, high confidence outcome of some simple work around the Bayan Khundii plant, as well as the Dark Horse area, where we rushed out a reserve to bring that in year 3. So if you remember, we just discovered that in 2021. Yeah. We hit 5 meters of 125 grams starting at surface, and we've drilled off 40,000 ounces of 7 grams effectively starting at surface, but we left a lot of it open. And so we'll get back there this year and begin to expand that resource as well. So I'd say priority around the pit, second priority Dark Horse, which we're going to open up in year 3 anyway. We then have the Ulan discovery half a kilometer to the west. Yeah. That is a interesting system in that we haven't done a lot of deep drilling in this area, but we did push that, discovered at 80 meters, hit first hole 50 meters of 3.5 grams, but we've drilled that down to 450 meters and stayed in gold, half gram type grades. But that opens up another opportunity for perhaps a bulk tonnage opportunity. We haven't even put it in resource yet. Half a kilometer to the west. Okay, wow. Yeah. So we're 200 meters to the west. We've got these new discoveries in October. Yeah. Half a kilometer to the west, Ulan. Yeah. And 2.5 kilometers north, we have Dark Horse, all of which need further exploration. Yeah. On top of the 500,000 ounces in the pit of 4 gram material.
God, how do you plan this going forward? Because at some point you become plant constrained, right?
Yeah.
Let alone pit constrained.
Yeah. Well, for now, if we can get it to 120,000 ounces with those things I added, and push this out to perhaps 12 to 15 years as opposed to the 6 years we have today. Yeah. That's the first step. We're going to continue to explore in a multitude of areas around that, and we'll see what we come up with. The truth for that will be at the end of the drill bit. But we also have, as you know, 16 kilometers north, the Altan Nar deposit. Altan Nar, in my mind, is an economic deposit. We just have to figure out how big it's going to be. It's 500,000 ounces today at 2 grams. It has good byproducts, silver, lead, and zinc. But you need to understand not just the scale for the purposes of the economics, but the scale for metallurgical processing questions. Yeah. Because there's various characteristics in there that change in a polymetallic type deposit. So get that work done, and then get to the point where we can have a concentrate that we can sell into China.
Right. Do we know what's the kind of split there? Because obviously...
So 2 grams of gold, 10 grams silver, about a combined % of lead and zinc.
Right. In today's market, in terms of value, where's the concentrate? Who cares?
It's dominantly, it's like 85% gold value.
Yeah, okay.
It's a volume driven by lead, but that lead, silver, gold concentrate will go into a smelter in China. Yeah. And we have previously produced that concentrate, had those specs reviewed and accepted by various smelters in China. So we know we can get that ore into that market. But again, it's a question of how big is it and how are we going to process it? Right. Simple concentrate, or if it's big enough, maybe you look at another process, whether that's bio-ox or pressure ox or something like that. For now, it's a concentrate type.
Right. So we're talking about obviously plant build, etc., pouring gold and ramping up and so forth. It's all good. But you said $10 million exploration program per year, self-funding. All good,
absolutely.
Right, all good. And some cash spare to, do whatever you need to do.
Our intent is to combination of paying back the loan, aggressive exploration, and look at cash flow back to shareholders through dividend and/or share buyback.
Right. Okay. So looking after all the same things. So with the exploration, because I guess that's the kind of fun bit, in the sense that you know a lot about what's going, where you want to go, and so forth. What's the kind of allocation there? Is that you've already outlined the priority order book. That doesn't necessarily equate to percentage allocation per target for now.
So, we have a 5-year program laid out, and each of those goes through a pathway where you're going to check certain boxes to determine that allocation as you get into 26 or 27. For instance, in the area around Bayan Khundii, there's not a lot of funding required there to bring those into reserves. As you move towards Altan Nar, it's a question of whether or not you're going to carry that through to the feasibility, which is where you get into that $10-15 million spend. But if, for instance, while we're drilling around the Ulan area or West Striker, and we were to hit, another 50 meters of 5 grams, all of a sudden that pushes into that priority area. And then it's a question of, is that another open pit? Is it a underground opportunity? So.
But in terms of the known data and the economic study work that you've done to date, and the nature of what you've got to do. The timeline and the time frame for advancing some of these other targets and the amount of work you need to do, it's going to be, you're going to be able to utilize some of the same information, right?
Absolutely.
And the fact that there's a mill there, maybe, I'm not saying shortcuts, but it'll be quicker, cheaper.
Pretty much everything around the Bayan Khundii site, Ulan, the West Striker, all the same character of ore, same metallurgy, same recoveries. We've done that work. The mill's there, the infrastructure's there. So yeah, that's very easy to bring into that plant, extend mine life, low cost. Altenar, as I said, a bit of a different story. Lots of work to do there on size and metallurgical.
So it sounds like a bunch of quick wins here, which is great for the bottom line. It's great for the bottom line. It's great for, being able to kind of, top up those resource and reserve numbers relatively quickly. No 27-year build up for that, right?
We, by the way, we will see those results come out for the 13,000 meters by the end of March, and that'll give us a better understanding of exactly what that grade looks like at surface. And I'm confident that we'll see some positive results coming out of that. The other thing I would mention that sits outside of the joint venture is the Zunmod molybdenum copper project. We've talked a bit about that before. It always seems to sit in the back seat, but it is a project we've invested $15 million in previously. It's a project that largely sat on the side because infrastructure was a challenge in that part of Mongolia. And the moly market in China was a bit opaque, but I wasn't quite comfortable we were at a point where it made sense to bring on another moly project. But if you take those two things separately, the infrastructure has changed dramatically. We now have rail and blacktop highways to that nearest border center, 200 kilometers southwest. You can almost think about it as where Oyu was when they got started, which was trucking that concentrate to the border. So and also we brought in power from China to the Bayan Khundii site. We've established that you can build a $100 million gold plant in this area. So a lot of things from the buildability, the infrastructure have given us confidence. But on the marketing side, moly prices have now been sustained at $20 plus for the better part of 5 years. They've hit as high as 40. We have had a mining analyst working for us in China over the last couple of months looking at that supply-demand equation because moly is a bit of a niche product and it is there's a bit of opacity in that supply-demand. But we have come out of that study feeling very confident about the deficit in China. There is an import of moly. The Shanghai Metals Exchange, which probably has the best fingers on the pulse of the moly market today, is predicting a 5% growth rate going forward for moly. And the reason isn't, usually we look at moly as being tied directly to steel. It's not about steel capacity increase or production. It's about the quality of that steel. And companies are looking to produce that higher alloy strength steel for various uses. And that's giving us confidence that what we see out of the Shanghai Metals Exchange is closer to that projected market.
Chinese regulations are suggesting it needs to be improved as well. So is there any other kind of credits in there? In
Copper.
Copper,
yeah. Right, so it's about a little bit more. It's probably 1.3 to 1 copper moly. The moly is the dominant because of the value of the moly versus the copper. But no, we're feeling very good about the market, the infrastructure changes, and we will move forward with a PEA later this year.
Do you know what it made? It's kind of amusing to me, some of the conversations I'm having to have at the moment in time, and it's a very combative environment, trade wars between best friends, US, Canada, Europe. It's kind of, we hope it settles down, that is what we want. But for a North American company with an asset in Mongolia, with one of the biggest consumers of all of this stuff next door, getting that balance right in terms of how we don't have to worry about access to capital anymore, I guess. So that solves a few problems for you, doesn't it?
I wouldn't say we need to worry about access to capital, but I think for a project like molybdenum coming into China, you still want that offtake partner or that that upstream partner.
But you're looking east there. Yeah, because you can't. So I'm only saying this in the context of some companies they're under a lot of pressure not to do anything that involves a Chinese food, the food chain, really, quite frankly, because Western money is saying, you do that, we're not giving you access to capital.
Right, yeah.
that problem's gone away for you.
Yeah, we don't see that as an issue. In fact, I have a number of parties that have expressed interest in funding the next stage of the Zumwalt project. So that's something we'll continue to move forward with. I wanted to feel confident beyond just what's in the public domain on the Molly market side, and we've secured that confidence now. So excited about that one.
You should be. Good job,
Thank you, sir.
Good
Yeah,
job.
Thank you.
Well done. Well, 2025 should be rather spectacular for you.
Yeah, let's hope. I mean, if the world doesn't come to a complete filibuster, it's quite a...
But that's my point at the end.
Yeah.
You don't need to worry about that.
No.
You've got monies,
Yeah.
cash flow, revenue for metals, which people want, and there's a market outside of the US.
Yeah, we're in a good spot.
You're in a good spot. Well done, you.
Thank you. Thank you. I appreciate that.